Hey, Weekly Walk viewers. Normally, before I introduce my guests, I love having my colleagues join, and it's not every week that I have a colleague, just 2 in a row, and that is because I am now standing with the newest OpenView partner, John McCullough. Congratulations, by the way.
Thank you very much.
Well deserved. He used to be our former VP of Corp Dev.
Yes.
And now, I guess you did well enough that...
I guess so, yeah.
You knew where you were doing a little bit?
Everyone found it in their hearts to trust me. I can't believe it.
We'll see what happens, but only we're day one here.
Yeah.
So, all right, so you started as our VP of Corp Dev, and you built out that practice. And at OpenView, the reason we have that, and all of you know we have an expansion team, is we invest in companies, but we want to make sure those companies are successful, and everyone wants a successful exit. And so John came in to build out that practice for us. So when I say private equity, let's talk Corp Dev. Like when I say PE, what's the first thing that comes to mind?
Cash.
Okay.
Lots and lots and lots of cash.
Okay.
I think that a lot of founders and entrepreneurs of companies have some sort of negative bias towards private equity as a potential outcome or home for their business someday. I think maybe that is warranted from years and decades past. But the reality is that there's so much capital flowing into private equity and big firms that do buyouts of software companies that PE firms are getting more aggressive. They are buying more SaaS companies at better valuations. They're buying smaller companies as well as large companies, companies that are not only extremely profitable like the typical leverage buyout model would imply, which they still do those deals, but companies that are also growing fast and maybe even burning a little bit of cash. So the world's changed. There's a lot of money tied up in private equity, and
don't be scared of it.
Don't be scared of it.
Don't be scared.
Don't be scared of it at all.
Advice from our newest partner.
It can be a great outcome.
All right. So in terms of 2019, we're obviously a few weeks in. What are you predicting? Whether it's from valuations, from the markets, IPOs, acquisitions. What are you thinking we're going to see?
So I think, you've heard a lot from OpenView about product-led growth companies.
Really?
Yes,
Probably?
yes, PLG.
No one knows that.
The acronym. And in corporate development, we pay a lot of attention to product-led growth companies, not only within our portfolio, but outside of it, and not only within the private markets, but the public markets. And we track how PLG companies perform relative to non-PLG companies. So my prediction will be they will continue to outperform non-PLG companies in the public markets in terms of stock returns this year. Even if there's volatility, even if there's an economic downturn, which could happen, I still think that these companies, given their go-to-market model and the great underlying unit economics that they post, they stand a good chance of outperforming this year. And that should hold true in the private markets as well. We're looking for great PLG companies, and I think they exist both small, big, and public and private. So.
Yep. And check out our PLG index online
exactly.
as well, online on our website. And then, all right, final question. Is it ever too early for companies to start thinking about their exit? And what is one thing that they can be doing like today that they should start doing to prepare for that?
It's never too early, really. I think, there's a lot you can do with relatively little effort, which is why it's never too early. I think that the one thing you can do is build your corporate deck, get it together even if it's 5 to 10 slides, and pick 1 or 2 potential future partners or acquirers. Maybe it's IBM or Oracle or a private equity fund, and get out and go meet these people proactively and show them your deck and tell them your story and just start building relationships over time and dig your well before you're thirsty, and invest in those relationships. And you never know when one might pay off and catalyze some offer for your company someday. You don't have to take it, but I think as an entrepreneur and a CEO, it's your job to create optionality for your business and for your shareholders. So you want that option, and the way you do that is by sort of seeding your ecosystem of potential suitors someday.
Yep. All right. So if you remember nothing else from this walk, go start networking. And if you see John, tell him congratulations. And I tried to make him wear a crown and or a vest, because you're not truly a partner at a VC firm unless you wear a vest. But I did it with him anyway. We like him anyway.
I have enough vests. I'll
for the next one. Weekly Walk
Take
2. All right. Thanks, John. Have a good one, everyone.
Thanks,
bye.